So you're going to see volatility. And I've always reminded you guys in the do not up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply. People get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher, but it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet.
Change your mindset to look forward to sell-offs. Think, okay, somebody's given you a wealth compounding machine and you get to have a go back. Let's say Bitcoin price goes to 200,000 and it comes back down to 70,000. You get to have another go again. That's a gift. I mean, Anson put it on Twitter and he's dead right. It's like, I cannot believe they give us this gift every 4 years where it becomes the worst performing asset and we get to make another 20, 30, 40x. Mm-hmm. And so if you use that mindset to say, hey, I'm in this for the long run. I'm going to stay in this trend probably for the rest of my investing life. I'll take money off and I'll do the normal things, but this is my investing journey now, like you do with your 401k or whatever it is. Then you should be very excited and thinking, how do I hoard as much cash as possible in 2025? So in 2026, you can play Chris Boniski on the internet, which is, he got it dead right. He'd hoarded cash and nailed it. And, I was still scrambling around adding. I mean, I luckily added all the way through, but I didn't have a big cash pile to do it with. I wish I had. Now, people might say, yeah, but that's why you sell out of the top. Don't do that. You can sell some out. But the thing is just buy the discounted prices if you get them, when you get them. And then you don't have to worry about nailing the low because you haven't got the money in the market, all sorts of weird stuff that happens. So it's basically not fearing things. It's looking forward to things. If you face your fear and actually turn it into your friend, it doesn't become a fear anymore. It's a psychological trick that works for every single thing in life. Most people live with their fears. They lie in bed thinking, am I going to make as much money as I want? Is the banana going to happen? And then am I going to lose it all? Okay, because they're thinking too short term. They're not thinking what it could be. They're not thinking about, okay, how do I de-risk it so I don't have to have these thoughts in the middle of the night? That monkey brain can go to sleep. And how can I get excited about the sell-off? Change that. You've changed everything.
Bitcoin and the crypto market is getting absolutely smashed the last few days. In a move that no one saw coming, we have just gone through the worst liquidation event since the collapse of FTX back in 2022. The move pushed Bitcoin's price under $55,000 as almost all leverage got wiped out of the market. It also saw Ethereum's price erase all its gains from the last few months, falling below $3,000 per ETH. Why such a brutal sell-off? There's three main reasons. First off, on-chain analysis shows that Mt. Gox has begun moving its nearly $10 billion worth of Bitcoin to exchanges, which is a sign that it is distributing its holdings to Mt. Gox creditors, many of which are predicted to sell. On top of this, we've seen a slew of selling from the German government, who holds over $3 billion worth of Bitcoin. And finally, the cherry on top is the US government, who holds over $12 billion in Bitcoin, start to move Bitcoin to exchanges, which indicates they intend to sell as well. In his latest two interviews, macroeconomic investor Raoul Pal gave his take on the Bitcoin and crypto sell-off and gave advice on what investors should do. Raoul believes that sharp market corrections of 30% or more should be expected in a bull market, and it's nothing out of the ordinary that we haven't seen before. His advice: train your mind not to panic when we have sharp sell-offs, but rather look at the long-term picture and view them as opportunities. Make sure to stick around to the end of the video where Raoul Pal breaks down his thesis on why central banks are about to seriously increase liquidity and why this will kick off the banana zone. Also guys, if you enjoy crypto content, consider liking the video or subscribing to the channel. Your support is greatly appreciated. But without further ado, let's jump in with Raoul Pal.
My view, and I've made this very clear, is Solana's my favorite horse in the race of the big ones. I think the first phase is always Bitcoin outperforming. Next is Ethereum. It's at this point in the cycle when the global liquidity turns higher And when global liquidity turns high and you've got a catalyst like the ETH ETF, it'll start picking steam. We saw that last couple of days. It was like, wow, okay, ETH is really trying to outperform. I think it bottomed on the massive ETH wedge chart that I put on Twitter yesterday, and I think it will continue higher over time. And I think ETH massively outperforms Bitcoin for the rest of this cycle. So that's the kind of flow: is Bitcoin, ETH, Solana, with Solana at the top of the pie. Again, I could be wrong. You don't need to follow my advice and my weightings and that kind of stuff. And you will find whatever your bag is, and you will be, please don't shill me your bag. I don't really care. And I'm not going to buy it because you're trying to FOMO me into some, $100 million token. It's just not going to happen. So don't do your bag, and why I must look at your particular bag, I don't care. But good luck to you. And hopefully you pick the next 100x. That's not the game I'm trying to play here. Yes, I have a small, filthy degen bag on the side, which I won't tell you what's in it, because then I'll be accused of shilling, and Twitter is a gruesome, disgusting place of which everybody will try and lynch me if one of those tokens goes down. So I'm sticking with the big stuff. So that's the crypto idea number one. It's humorous, but I do it on purpose. I try and purposely communicate this stuff in ways that people understand and find humorous, so it sticks in people's minds. It's like, and this is on a serious note. The world, I am very optimistic about many, many things, particularly the world of investing. And what confuses people is I am optimistic because I think it's absolutely fucked. We've broken the global economy. We've broken financial markets. We've broken trust. And that means that more liquidity is the only answer to drive this beast. And that drives markets higher. Now, when we go out towards 2030 and beyond, I don't even know what the world's going to look like anymore. I spent my whole life living in the future, and I do not know the disruption of AI, robots, genetics, abundant near free energy, all of the things that are coming. I think it just completely changes. It's a singularity event for economies as well as humanity. And I think it might change economies first. I don't know what businesses even survive, what new businesses are, what the business models are. I know nothing. And that's an honest answer. So I do know we've got 1 or 2 cycles left of the everything code, because we can't avoid the everything code, because nobody can pay the debts, and in which case the whole system collapses, which they won't do because the baby boomers need to retire, and they're trying to support the baby boomers savings complex and the government itself. They can't raise taxes to pay for the bills because nobody's got any money, and politics are too fragile right now to raise taxes. So they just clip the coins instead, which is debasement of currency. And there's only 2 assets that outperform the debasement of currency. And I've talked about this ad infinitum. And that is technology stocks and crypto. And crypto is the fastest horse in the race. And now, why don't fuck this up is because neither of those 2 assets are particularly easy to own, because they're volatile. They want and people hate them. People whisper in your ear all day long. They mock you on Twitter. They tell you you're stupid. You shouldn't do this. You shouldn't do this. Buy my value investing stock. You should buy the Russell 2000. You should diversify, my friend. And meanwhile, we've got probably 2 cycles less. 2 cycles less left to not f this up. Again, apologize for all the swearing, but this is actually important. 2 cycles to not fuck this up. This is your chance, and these are the only chances we're going to get. I won't be right in everything that I do. The everything code seems directionally pretty right. It'll at some point be somewhere wrong. We will see where we go. But I think overall, generally, on a macro secular theme, I'm usually not wrong. The paths, they can change. So anyway, so don't fuck this up is important. It's trying to teach you how not to get shaken out. Because if you get shaken out, you'll miss the last chance, or the last chances we get. There will be a down cycle in the middle. You need to understand how that's going to work. And then finally, really at the end of it, we should have unfucked our futures. And again, it's a humorous thing. It's nice to talk about, nice to drop in, but it's actually really serious about fucking your futures. if you're young or if you're old, you've got a real problem on your hands. I can see that by the retirement crisis video got viewed 4 million times online, because it's a stress point for people. If you're young, it's like, God, I've got student debts. I'm 35 years old. I've got student debts. I've got 2 kids now. I've got married. I've had to move out of New York City or whatever city. I'm worried about job security. How's everything going to change? How am I going to save? I'm putting money in my 401k. Doesn't seem to pay for a house. How am I ever going to pay for a house? These are the answers. This is why the millennial population are drawn to crypto hugely, and rightly so, because they want and need that risk to give them a chance to do what their parents had. And that's why they're drawn to technology investing and even in option investing. If you're doing that if you're doing standard investing in your 401k and with your discretionary side, you're trying to get ahead by taking these wilder bets, I think that's a pretty sensible investment strategy. I have no issue with that whatsoever.
So there's Raoul Pal on why sharp market corrections like the one we're currently in the midst of are to be expected. The key is to zoom out and lengthen your time horizon. Although there will undoubtedly be liquidation events like the one we are in right now, on a long enough time span, a few things are certain. The first is more monetary easing, which means more money printing. The assets that perform best in periods like these are crypto and technology stocks. If investors just remember that core thesis, they can begin to view these massive sell-offs as gifts. Now, let's jump into another one of Raoul's interviews where he breaks down why he has such high conviction that more money printing is coming and when the banana zone will come. But before that, today's video is brought to you by Crypto.com. If you still haven't got a crypto card yet, you're living in the past. With traditional cards, you have to pay annual fees, they take percentages, and some banks charge you at every transaction. That's not the case with the Crypto.com Visa card. With a Crypto.com Visa card, you can spend your crypto anywhere you want, and the benefits are insane. With your Crypto.com Visa card, you can earn up to 5% back in Crow rewards on every transaction, enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for the first 6 months, get complimentary access to airport lounges and elevate your travel experience, and flaunt your style with the sleek and stylish metal card. Now, Crypto.com is currently giving out a $25 new user sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. First off, download the Crypto.com app by clicking the first link in the description or scanning the QR code on screen now. Second, sign up using our referral code nutty for your instant $25 bonus. Thirdly, once you've signed up and have been approved, here's how to get your Crypto.com card. Tap the card tab at the right of the navigation panel, select your preferred card tier based on the required cardholder Crow staking or lockup amount. I personally have a Ruby Red card. The only requirement is you lock up 400 USD of Crow for 180 days, which is then unlocked. Then accept terms and conditions. And you'll have to have sufficient Crow in your crypto wallet for the 180-day stake or lockup. Finally, submit your delivery address. Then you'll get your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. So to claim your $25 bonus and earn up to 5% back on all your spending, click that first link in the description to get started with Crypto.com today. Now, back to the video.
Don't assume central banks are stupid. That's a lesson I've learned. Assume that they know what they've got to do. If the game is, we need to roll $10 trillion of debt this year, and the Europeans have to, and the Chinese have to, and the Japanese have to, and everybody else, the best single thing would be to lock that in for another 4 years at the lowest possible rates. So it's kind of like, maybe there is a game here, which is to undershoot. I've observed that they're all in cahoots with each other, all of the central banks, plus all of the governments. So there's no independence of central banks. They're all working together. You can see how Janet Yellen and Jay Powell operating the TGA, the reverse repo, they're completely working together. Same in Japan, same in China, same in Europe. Everybody's doing the same thing. Mm-hmm. So I kind of think if they're doing it late, they're doing it on purpose because they're not stupid. They can see the same models. What? My work is better than all of the people at the Fed? No, they're choosing to do it for a reason. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it Banana Zone. It was the front cover of Global Macro Investor was Banana Zone. And then we started realizing, you know what? The macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle, and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams, is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit. I mean, I've explained there are two assets in a secular bull market, technology and crypto. Arguably crypto's technology, but that's it. So number go up the most. We're going through the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know, to the power of what? The power of 10, the power of 100? We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? Now, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You know, you need real cash flows and real this. It's like,
I think people want to believe you, but they get hung up on fractals of what happened in 2000 and that sort of thing. But I do think people want to believe you. It's just they're like, oh my God, but what if, like, look at all these grifters, or like what happened to Cisco and all of that.
Yeah, and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like, once you simplify it all down, stop all of the monkey voices in your head. Filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today.
Well,
I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, 35 years of work on this. I think I'm right. But, you know, we'll see. I did this. I went to Oxford University and gave a lecture. I was never smart enough to go to Oxford, but they asked me to come and do a lecture at the finance club or whatever. And I turned up and my speech was, everything they teach you at university about economics is bullshit. And I just showed them, I'm like, okay, so, you know, talk to me about your economics models. And they all have these lovely linear models. I'm like, okay, so here's the chart of GDP. What is the feature of GDP? It's like, ask a child, it goes up and down. Why do none of your models have an up and down business cycle? They're like, oh. I'm like, if a child can see that the NASDAQ is 97.5% correlated with global liquidity, the probability is that it is.
Yeah.
It's that simple.
So there's Raoul Pal on why increased liquidity is undoubtedly coming and the banana zone soon after. The recent sell-off in the crypto market has undoubtedly shaken many investors, but remember, as Raoul Pal points out, corrections are a natural part of any bull market. Understanding the underlying reasons, such as the Mt Gox Bitcoin distribution, government sales from Germany and the US, and macroeconomic factors can help us navigate these turbulent times more confidently. By keeping a long-term perspective and recognizing these sharp declines as potential buying opportunities, you can better position yourself for future gains. And with central banks poised to increase liquidity, we might be on the cusp of an exciting period of growth in the crypto space, what Raoul calls the banana zone. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more insights and updates on the crypto market. Anyway guys, hope you all enjoyed today's video. I'll see you all in the next one, and as always, all the best.